Now we are doing something called as SA 710. Then after that, we'll do joint audit and branch audit. And as I told you, I'll be giving you a separate link in relation to the Caro revision. And Caro revision is done in a very in-depth manner in that revision video. And that will attach to this video. And I'll send you all share the link with you all. Okay. Now let's start with SA 710 revision. Okay. 710 is a pretty important one. It is called comparative information, corresponding figures, and comparative financial statements. तो पहले तो यहाँ पे you have to understand that corresponding info your comparative information itself means comparative information itself means corresponding figures and comparative financial statement. ये दोनों को मिलके यहाँ पे बनता है comparative information. So the auditor, if he's checking in relation to corresponding figures, his opinion will be referring to the current period only, except in 3 cases which I'll tell you. Whereas in the case of comparative financial statements, his opinion will refer to each period for which the financial statements are presented. Okay. Now let's go to the next part, that is in relation to come to this part in relation to corresponding figures. Corresponding figures basically means what? That the auditor has to check along with the should the auditor check along with the current period figures, the previous year's figures also? Normally the answer is no. The client will present the current period figures along with the previous year's figures, but the auditor need not check the previous year's figures normally. However, they have said here, see, you will understand the level of detail presented in the corresponding amounts and disclosures is dictated primarily by its relevance to the current period figures. When corresponding figures are present, corresponding figures mean last year's figures are presented, the auditor's opinion shall not refer to the corresponding figures, shall not refer normally, except in the following circumstances. They are given 3 circumstances here. Uske alawa, auditor will always give his opinion regarding the current period figures and not the previous year or the corresponding figures. Now, what are those 3 exceptions in which the auditor will also comment on the previous year's figures? So they have given here that, and I've given this example to you in the class. And now we'll do this part here. So I hope you will be able to recollect and remember. Please see here. First of all, whenever in the prior period the auditor had given a modified opinion, and in this year the company should have resolved that matter, but the matter is not resolved by the company, it is unresolved, and the matter is material, the auditor will mention the prior period figures along with the current period figures, just a second, along with the current period figures, along with the description of the matter. He'll give a description of the matter. Whenever the auditor is commenting on the matter in which last year modified opinion was given, and this year the matter is unresolved by the management, but it is not material. The matter is not material. It is coming in the case of other cases, other matters it is coming into. In that matter, you will understand that the auditor here will only mention the prior period figures along with the current period figures, but that description will not be that much. Okay, only the effects will be written, but the description will not be given in a detailed way because it is not material for this year. Next, in the last year, the auditor had by mistakenly given an unmodified opinion, but where modification was required. And then in this year, the company should deal with the misstatement and the company should correct at least in this year. But if the company has not done that, then the current period's auditor's report, the auditor will express a qualified opinion or an adverse opinion. Simple. The third scenario, and that is, sir, if the last year financial statements are not audited at all. So in this case, what will happen if the last year's financial statements are not audited only? Then the auditor will mention in the other matter paragraph that the prior period of the matter in relation to last year was not audited, that he'll mention. But the auditor in this case will not be relieved from a responsibility. The auditor will still have to do something in relation to that opening balance which is coming in this year from last year, even though it was not audited. So for that, the auditor should do procedures as per SA 510, and that is the auditor should check whether opening balances contain any material misstatement or not. That is what the auditor should check. Okay. Next, after that, we did something called as comparative information, corresponding figures, and now we are going to do comparative financial statements. So I just want you all to look at this part. Just a second. Comparative financial statements. The comparative financial statement is basically when the auditor is given the work from the client, and they are telling the auditor to check more than one financial year of the past and give them their opinion as per the client's format, then that is called comparative financial statements. Now, in this case, can the auditor's opinion, can you as an auditor who is doing comparative financial statements, can your opinion differ with the opinion given by some other auditor in the past? The answer is yes. In that case, the auditor has to give substantive reasons for those different opinion which is there. Okay. Let's go to the next area, that is in relation to joint audit. Okay, so let's see this. Joint audit is not on the screen, so I'll show you on a blank screen over here. Just a second. Okay, let's go for it. Now let's do joint audit. Joint audit is a very simple, easy matter. It is a very clear distinguish between is there, and it is very easy to remember. Okay, let's do this. So in joint audit, you have basically four areas to be covered. Okay, four. First is called what are the advantages of joint audit. Second is called what are the disadvantages of joint audit. Third is in relation to joint audit. What are the special considerations to be kept in mind? Special considerations of joint audit. And the fourth question that can come in the exam is the joint auditors are jointly and severally liable. In which cases joint auditors are jointly and severally liable. Jointly and severally liable. In which cases? In which cases? This will do. Okay. Now after that, we have a very simple one called as branch audit. Branch audit is a read area. You can just simply go through it. Very, very simple. And in branch audit, you have to simply just do a reading here. That is not a problem. Okay. Now in joint audit, you have to remember the advantage. Advantages are very, very simple. If you do the hand actions with me, very, very simple. Tell me this. First is sharing of expertise, mutual consultation, lower workload, lower staff development cost, lower cost to carry out the work, better quality of performance, improved service to the client, local firms, and healthy competition. Simple. What are the disadvantages of joint audit? If you remember clearly, very simple again. Tell me this: fees being shared. Then after that, you have psychological problem. Then superiority complex. Then problem of coordination. Then next point will be common concerns are often neglected. Uncertainty about the liability. Okay, uncertainty about the liability. This is how the points are covered. Okay, that completes of this area. Now, what are the special consideration of joint audit? We had done our favorite song, that is Belageddu. Okay, so Belageddu is a Kannada song which we had done. Okay, so let's do this. The song goes like this: involved in planning overall audit strategy, discussed and develop a joint audit plan, identify the divisions, reporting objectives, communicate teams efforts, preliminary engagement activities, NTE of resources, assess the RMMM, document the NTTE, common engagement letter, work allocation. It's covered in this manner. Okay. Now, joint auditors are jointly and severally liable in which cases? Again, the cases are very, very simple. Cases go in a very, easy way. It is VAD by all and FSAR compliant. This code I had given you in the class. That is work done by all, agreement by all, and decision by all. FS and AR, whether they comply. FS, whether it complies with uh, the statute, what the statute says, and whether the audit report complies with what the statute says. For these matters, joint auditors are jointly and severally liable. Comfortable? Okay. Now that completes the revision in relation to joint audit. Branch audit, you can simply go through this as per SS 600. You can simply go through it. It's a very simple area. This explanation was done in the class with the branch audit area. I told you that if the branch auditor is, you are planning to appoint a branch auditor in an Indian branch, then it has to be a CA. Some other CA can do it, or the head office auditor can do it. No problem. If there is a branch which is outside India, then either the company's auditor can do the audit, or a accountant or an auditor as per the laws of that country, they can become the auditor. No problem. Okay. Simple to understand this area. Okay. So go through it, and I think you will not have any trouble in this. That completes the revision of chapter number 8. And the Caro link I'll be giving in the description.